Look at Finance is underwritten by Janney Montgomery Scott, trusted advisors for generations.
Welcome back. It's Thursday. Stephen Carleton is here for our weekly look at finance, our regular appointment. Hey, how's it going?
Excellent.
I missed you last week, so we got a lot to talk about.
Welcome back. It's good to see you.
Thank you. Good to see you as well. Today we're going to talk about the third quarter, some earnings. We're getting some new earnings coming out, which are showing a different picture to some of the companies that have previously reported.
Yeah.
So we'll talk about that. We'll talk about oil interest rates, which are both down.
Right.
We'll also get into a little bit about the government shutdown, some medical device cuts. We'll cover it all in the next.
Did you mention global warming? I think we missed
that. We may do that as well. And if we have time, we'll get into men's fashion tips.
Fantastic.
Let's start with some of these third quarter earnings. Some mixed signals coming out from the markets.
I think that's a fair assessment, David. You know, we've seen the beginning of the third quarter earnings, things like Caterpillar, things like IBM, Goldman Sachs, Visa, that initially people didn't respond particularly well to. They weren't quite what people had expected, and the stocks reflected that. Although today, after the market closed, we had some good news. We saw Amazon beating on revenue. We saw Microsoft beating on the top in revenue and earnings. So some good positive signs, but definitely it's been a mixed bag so far, third quarter.
Experts say that they're not really looking at these. They're looking to next year, though, right? That's why the markets are still quite closing higher, as you said, because they're not really looking at what's going on right now. They're looking at the bigger picture.
Well, it's a fascinating point, Dave, when you say that, because third quarter earnings, we've already moved past it. The S&P closing above 1750 today. They're like, third quarter, that's yesterday's news. Where are we going to be, in January, February, March of next year? And so there is somewhat of a feeling that this earnings guidance isn't as important looking to the future. But I think there's a lot of indicators in this that will help us be a little bit more accurate on how things are looking. And it like I said before, it's a little bit of a mixed bag. Not quite as strong as some of the other quarters.
Oil is down, interest rates are down. I noticed that I'd been overseas for just over a week, and I got back and I filled up my tank for, I think it was $3.33.
Nice surprise,
which was
right?
A really nice surprise, filling up when I got back. That could spell good news for the economy.
There's no doubt that there's a correlation between the higher the gas prices are, the more of a drag it has in the economy. And people saving some money. Oil's down below $100 a barrel again this week. So that's been a good positive bit of news. That Syria concern seems to be off the table now. We talked about it a couple of weeks ago. It kind of just disappeared.
Yeah.
And then there's no doubt about it. The U.S. dollar going lower. There's some people that are concerned. It's a mixed bag. It could be good for manufacturing and exporting, but some of our import costs could be negatively affected. So it's a bit of positive negative in there.
I'm a big fan of Twitter. You're an occasional fan of Twitter. When you're tweeting, we both do tweet.
Yep.
They just released their IPO.
Yeah, they're announcing their IPO, right. So this is something that's going to happen, and it kind of reminds me a little bit about what we talked about with Facebook coming out. It's one of those things that we haven't had a lot of IPOs come out as of late. It's been below average this last year. But it's good news. I think it's an interesting position. It's there's people come out on both sides of it, but in the next few weeks it's going to be interesting to see how this plays out.
1.4 billion.
Yeah, the valuations around that range. It'll be really interesting to see how this looks. Kind of like Facebook. It came out, it went down, it went back up, and so there's these types of firms in technology. It's always a little bit of uncertainty with it.
Well, the goal here is to see where the revenue is going to come from. People are using this for free, so you're going to get bombarded with advertising, and so that's where they got to figure out if the model is there for that.
Yeah, it's definitely a fascinating new way to engage social media. It's definitely something that's caught on, but yeah, how to monetize that is the million-dollar question.
Well, we will stay tuned to that. While I was gone, the government shutdown came to an end, was following that closely. Of course, we're now, a week back to the government has been back to work.
Functioning, yeah.
And today, congressional hearings on the Hill about Obamacare. Of course, that was what they said the reason for the government shutdown was Obamacare, perhaps not. But anyway, congressional hearings today, something we had talked about where we just thought that this was rolled out far too quickly, and the website company that does all the web infrastructure said the problems with the website weren't their fault. It was the government's because it was a rush job.
Yeah, there seemed to be a lot of people saying it was that other person's fault and not our own. I don't think there's anyone on either side that would question the fact that it did not roll out as smoothly as they wanted to, that the enrollment process through the web medium has not worked anywhere near what people expected it to. And this is a huge part of our economy. The healthcare sector is, the sixth largest, so it's a huge contributing factor to GDP. It's a huge component in our area when we talk about people in healthcare and everything else. So this is something we have to be very, very careful of. And what I was seeing out of the hearings today was there is not a whole lot of responsibility being accepted for what's gone wrong, which then makes it, I think, in my mind, more difficult to figure out how to fix it. When nobody is owning up to where the problems are coming from, or where it becomes a little bit more difficult to find the solution. So I don't think this is over in any way, but getting this wrong could be very, very serious drag to the economy, very, very serious issue, because healthcare, we're seeing all the states having to shut off people that have existing healthcare because there's no longer Obamacare compliant. So we're literally seeing hundreds of thousands of people across all the different states losing healthcare coverage. It's going to be turned off at the end of the year.
And having to get onto one of these new exchanges.
Which may or may not be the same costs of what they currently have. And so there's so much uncertainty here, and this needs to be a much smoother rollout, and it just has not happened.
Well, as you said, sixth largest part of the economy, and in our area, Glens Falls Hospital, biggest employer in the city of Glens Falls. Yeah. You got Saratoga Hospital into the capital region, where you got several. This is a big issue. Another issue with the Obamacare, the Affordable Health Care Act, of course, is this tax that they've got on medical device manufacturers, of course, Catheter Valley in the Glens Falls region. Yeah. Boston Scientific no longer have facilities here in our area. They sold that twice now. It became Navalist, is now AngioDynamics, which of course headquarters in Latham, two manufacturing plants, one in Queensbury, one in Glens Falls. Anyway, but back to Boston Sci. Yeah. A sign of things to possibly come. Cutting 1,500 positions, $200 million in operating costs by 2015. They're blaming the economy, demand, and pressure from the government.
Yeah, that was not particularly good news. And you hit the nail on the head, David. This is something that it isn't just New York. All states have these types of medical manufacturing companies. And these are well-paying jobs. These are jobs with benefits, and in a lot of cases, pensions. The halo effect that they have in the community is huge. And cutting these kinds of numbers because of the uncertainty is not good for the overall economy. So I think there's a lot of senators, a lot of Congress persons that are saying, let's take a look at this tax. This may not be the most effective way to run things. This could be a detriment to the economy in that particular sector. And there's a lot of noise about that. And again, anytime there's this kind of uncertainty, with the government shutting down, the debt ceiling and everything, none of this stuff has gone away. If anything, I think it's more uncertain than it was 3 months ago.
Yeah, well, we have seen that, and obviously not directly related to the Affordable Care Act, but Covenant, which was a company in Washington County, is closing. We've seen the consolidation of other ones. So there's some changes coming in that industry, and it will only get worse for them if this tax is not repealed.
Yeah, I think there definitely has to come a solution, and the more certainty we have, we've seen in the past how quickly companies make plans and adjust once there's certainty. And I think the biggest issue is the uncertainty with taxes, uncertainty with the rollout of the plan, and it reverberates into all the different parts. Even uncertainty with the taxes, when you think about the debt ceiling and those kinds of things, it makes companies just freeze. And that's the big thing. It's not just New York, it's across the country.
Across the country. Stephen Carleton from Janney Montgomery Scott, first Vice
Thanks,
President.
David.
Thank you. Always good to dissect, go a little deeper into these stories.
Always a pleasure.
Now, to see this segment, all our segments, head to the website. It's looktvonline.com. We post them there each and every Thursday.